It's October 2nd, and of course this is the video log that takes 30,000 to a million. And today, after I reviewed the account for you, I want to talk about my company of the day, which is going to be TD Ameritrade. It's a platform, financial platform for investors. They'll provide all kinds of financial services to individuals and whatnot. So I'm going to be talking about that and what I think about it. And of course, you can't talk about TD Ameritrade without mentioning Charles Schwab, because they are merging and they're in the process of doing so, and the process will complete sometime between 2022 and 2023. So we've still got some time before that happens. But let's go into the account, all right? So I'm sitting at, excuse me. There we go. No redos. This is professional. It's not professional. Okay, so I'm sitting at 100,017 or 117,000 rather. Third time's a charm. And I'm down a little bit pre-market or during the night because, of course, the president cut the Rona, and so now so does the market, right? So goes the price, so goes the market. But we'll see if these losses hold up. I'm gonna quickly scroll through my positions and show you my exact holdings, so you can pause the browser anytime and just try to see, my up and my down or whatever. So over here on the right, it'll tell you the change of these options, and you have the symbol, the ticker, the price, whether it's a put or call, the expiration date, how many contracts, and whether it's a put or a sell, a sell or a buy. So you can pause the video at any moment to try to figure out the exact details of every position if you really want to. And because I'm going to quickly scroll through it, I've got a lot of options, man. Tons. Alright. So here are my actual stock positions. I got Apple, of course. It's down pre-market a little bit. Main, realty income. I'm trying to acquire that, quite a bit of them. Hopefully I get a ton. And then you can see the rest of the positions. Scrolling. I got rid of what did I get rid of? Company I bought recently. Anyway, I have a lot of Schlumberger that's about to be bought. That's what I'm looking at closely here. I've got a $17.5 put, so I'm going to be getting another 100 shares of Schlumberger. Alright, so that's about it. Here's the account tab if you're interested. This is what it looks like right now. Got $122,000 in the management, which is cool. $5,000 margin at the moment, which is, I'd rather not have it, but the deals are just so good. I really don't want to pass them up. Like, the more I start looking into all these stocks and all these companies, the more I want to buy. And so I'm having a hard time just not going on margin. This is my position sorted by total return, and of course you got to take into account the options when I'm sorting it like that. And this is them sorted by equity. It looks like the emerging market fund has gone down a little bit, but that's okay. Alright, so back to the account here. I mean, the account is moving okay, nothing spectacular. I'm not like sad or happy about it. I'm just kind of neutral about the performance in the recent months. If things drop down even further during the election, I'm going to, of course, try to take advantage of that, and I'm going to try to buy up some more companies, maybe enter in some more option plays. But if things get better, I'm just going to try to get rid of the margin as much as I can. But let's go into my company of today, the topic of today, which is TD Ameritrade. And I was actually trying to look at financial related companies that I like, and just looking at the overview, just real simple, looking at the ratios and the stats and all that stuff and the details without going too deep into the balance sheets. Although I did a quick overview of the balance sheets, I'm sorry, the financial statements and stuff of TD Ameritrade, but I just looked at the bottom line numbers, like the revenue growth and etc., like what it was. And so it looks like TD Ameritrade actually is growing, but the company that is buying it out, Charles Schwab, actually isn't growing as much. So it's going to be a bit weird. What can I say about this deal? I think that it's a really good deal for Charles Schwab because they're buying that growth, and they're buying, they're taking in a lot more assets under management, right? And they're acquiring a ton of customers, $26 billion worth of customers, right? But I think it's a really good buy, actually, because of TD Ameritrade's growth. And they have still been growing ever since they initialized the deal. They have been growing. I'm going to show you the FinViz of it. Okay. So this is the chart so far this year. As you can see, it hasn't reached its previous highs from the beginning of the year. Let's see if we can expand the chart a little bit further out. This is since 2010 or so. Yeah, you can see it pretty well. So it reached a high over 60, but now it's trading at around 40. And I think it's a pretty big steal, actually. So if you look at the numbers here, excuse me, just as an overview, the market cap of the company is a little bit under $22 billion, and its income is a little bit under $2 billion, which puts it at a current price to earnings ratio of 11.46, and forward P is 15, which is again very, 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 very reasonable. It's a very good ratio for, especially for nowadays when things can go up into like 25, 30, 35. I mean, Apple was like in the upper 30s, right? Everything, I mean, it pays out a dividend of 3%, which is fantastic. 3% is a really good yield. And the great thing about it is that the payout ratio is only 34%. Okay, so they're only paying out 34% of their earnings in dividend, which is spectacular. I really, really like that. They only have 9,000 employees, which is good for, liability and for overhead. So it's very easily maintained company. And then on top of that, the big numbers that are very, very impressive here are, of course, the margins. It's not that unusual for a company like this to have extremely high margins, but these are extremely, extremely high margins. And the return on asset, return on equity, and return on investment are 4%, 21%, and 19%, and none of them are negative, which is amazing. And a couple of them are in the 20s, so that's really, really good. So I mean, this company right now, at this price, I think it's an absolute steal. Could it go down further? I hope so, because then I could just load up, because I really want to buy it. But there are some things that are holding me back from buying this company, of course, which is Charles Schwab. I think this company would be a much better buy if it didn't get bought out by Charles Schwab. And here's what Charles Schwab looks like, right? So you got an idea for the numbers. And now we're going to go to the future parent company of this company. And they're pretty much a clone, just like a bigger, slower, non-growing clone of TD Ameritrade. They do the exact same stuff. And but they just don't do it as well. So the market cap is 47 billion, so more than twice the size of TD Ameritrade. And then they have an income of 3 billion, which puts them at a price to earnings ratio of 15.84 and a forward PE of 20. So not as well valued at the moment as TD Ameritrade. They have more than twice as many employees, 21,000, and their dividend's only 2% with a payout ratio of 29. So they're only paying out 29% of their earnings to keep up with the dividend. And this is this is stuff this year. Companies in general are not doing very well this year, but because everybody's staying at home and trading and doing things like that, I guess it's not too bad. So anyway, almost 2% dividend, which is fine. And then we get into, of course, the numbers that don't look as good as TD Ameritrade, like return on asset, return on equity, and return on investment, which are 0.9%, 14, and 1.5% respectively. And then the margins, of course, are just as spectacular as TD Ameritrade. But the return on investment isn't there, return on asset, and also the growth. I mean, from different sources, they have grown. They've actually reduced growth, whereas TD Ameritrade has increased. So it's such a good deal for Schwab, and I think a bad deal for TD Ameritrade. Now, there's other details in the deal here that that are pretty interesting. So they both have platforms that help traders do research and all kinds of stuff and all these type of products, and they can't decide which one to keep. So currently they're keeping both, but they're just basically buying time to figure out what they're going to do. But if they do merge some of the best features and they design a really nice program or application, whatever, from both of their platforms, I think it would serve them really well if they streamline everything and make it really user-friendly. And I mean, I don't use them myself, so whoever uses TD Ameritrade or the Schwab, whatever it's called, it's like Street Smart Edge or something like that. I think TD Ameritrade actually has even two trading / research platforms, like Thinkorswim and then something Pipes, but that's irrelevant. So my point is that both companies provide different services, and they're merging now, so they're going to have way too many services, and these services have to be kind of consolidated because a lot of them are doubling up. And that's the big advantage of merging, is so you can basically use one product and double or substantially increase the amount of people using that product, and you can get rid of employees and management and a whole entire board of directors, right? You can get rid of that. You can just have them, you don't have to pay any of these people anymore. So reduce overhead and just basically streamline and gain a competitive advantage that way. But technological mergers are not that easy, right? They just take a long time. They got to integrate, and so it's a bit more difficult. So I don't exactly know how it's going to go. So to me, the big risk is whether people are going to want to stick around for the products that they develop later on. But if they're getting talent from two fairly, established and technologically progressive companies, I think that they'll be able to muster at least one good team to kind of develop maybe or make improvements to one of the programs and just have it be their flagship kind of research / trading platform. So there's some promise there, but a lot of it depends on that. However, when I'm looking at these numbers, it's just so attractive. There are risks, but man, if it's a pretty safe business. It's doing well in a situation like this, like the year that we've had this year, and it just seems to me like it's an absolute steal, right? Especially if we have a little bit of a dip here around election time. Like, I'm thinking of just buying it, even though I don't normally invest in financials, and this is kind of stocks, and this is kind of new to me. But if you have some interesting details or articles or opinion on TD and Schwab and or other brokerage houses or anything, like any companies that are finance related you think are worth buying, just let me know. Give me a comment and let me know what's up. Alright, I'm gonna end it right here, keep it a little shorter and sweeter at 14 minutes. Alright, peace out.